Good morning. I'm Brian Curtis. Here are the stories we're following today. The current Israel-Hamas pause is nearing its end as talks continue. Ed Baxter with that story and more from San Francisco. Ed?
Yeah, we're not getting a lot of information out of it either, Brian. Negotiators from Qatar and the U.S. are pressing for the agreement to extend. Israel's demanding all the remaining hostages be released, and U.S. Secretary of State Antony Blinken says continuing the ceasefire may be the way to get that done.
Its continuation, by definition, means that more hostages would be coming home, more assistance would be getting in. So clearly, that's something we want, and I believe it's also something that Israel wants.
Now, more hostages were freed today, and the hope is they're still for a second release before the deadline, but it is bittersweet for some. Shani Siegel was released earlier. Her cousin talks about her response.
We were ecstatic, but the joy only lasts a few minutes, because then you realize she was released without her husband.
Yeah, Hamas has not released any men as of yet, so we'll hope for word soon about that ceasefire. And in the U.S. Senate, Majority Leader Chuck Schumer spent about 45 minutes on the floor talking about the spike in anti-Semitism in the United States.
Many of those marching here in the U.S. do not have any evil intent. But when Jewish people hear chants like "From the river to the sea," a founding slogan of Hamas, a terrorist group that is not shy about their goal to eradicate the Jewish people in Israel and around the globe, we are alarmed.
He says this goes way beyond legitimate debate about Israeli policy into a very dark place. Ukraine. NATO-Ukraine Council in Brussels today. Renewed call for continued aid for Ukraine from Secretary of State Blinken.
Some are questioning whether the United States and other NATO allies should continue to stand with Ukraine as we enter the second winter of Putin's brutality. But the answer here today at NATO is clear and it's unwavering. We must and we will continue to support Ukraine.
The scheduling of the vote for George Santos' expulsion needs to be done by tomorrow under terms of the resolution, but House Speaker Mike Johnson, well, it doesn't sound a whole lot like it.
I think the vote will be Friday. That's all I'm going to say about it.
Friday. But the resolution says tomorrow. Now, earlier in the day,
I personally have real reservations about doing this. I'm concerned about a precedent that may be set for that. So where everybody's working through that, and we'll see how they vote tomorrow.
Yeah, so we'll see where it goes. Santos has scheduled a news conference for early morning at the Capitol tomorrow. The Taiwan's president, Tsai Ing-wen, says she believes China is too consumed by domestic economic and political problems to invade Taiwan. This even as Beijing ramps up military pressure. And as Google has struck a deal with the Canadian government over contentious law that would force pay for news, it would avert the news block schedule for next month. And I was searching here, a story just up on the Bloomberg terminal. Elon Musk says advertisers that have stopped spending on the platform due to his endorsement of anti-Semitic posts can F-word themselves. He says what it's going to do is kill the company. Global news 24 hours a day and whenever you want it with Bloomberg News Now. In San Francisco, I'm Ed Baxter. This is Bloomberg.
And we tackle now some of the top business stories of the hour. Well, U.S. Treasuries rose on trader bets that the Fed will cut interest rates in the first half of 2024. Two Fed officials made the case for continuing to hold interest rates steady. Let's run through some of these now. Cleveland Fed President Loretta Mester said that policy is well positioned for the Fed to be nimble and respond appropriately to incoming economic data. And Atlanta Fed President Raphael Bostic said he's growing increasingly confident that inflation is firmly on a downward path. However, Richmond Fed Chief Thomas Barkin told CNBC he is not yet convinced.
I think you want to have the option of doing more on rates. And I guess the bigger point is there's no precision that anyone can point to at exactly what is the level of rates that exactly handles inflation in exactly the way you want to handle it. And so you're constantly trying to adjust on the fly as you learn more about the economy, as you learn more about the impact of demand on inflation. And that's what we're learning as we go.
Thomas Barkin there on CNBC. Fed officials meet next December 12th and 13th.
We're hearing two health insurance giants are in merger talks. Bloomberg's Ann Cates reports. Cigna and Humana are working on a potential cash and stock combination that would create a giant in the health insurance industry. The two would become a powerful challenger to United Health and CVS Health. The move would also shrink the number of publicly traded national health insurers from 6 to 5 and give the Cigna-Humana entity more leverage in negotiating with hospitals or Medicare. The tie-up would likely face antitrust hurdles. In Washington, Ann Cates, Bloomberg Radio.
Interesting, Paul, that both stocks went down. You don't often see that in one of these merger-type stories. Cigna was down 8% for the session, and Humana was down 5.5%. Well, shares of General Motors jumped more than 9% after the automaker announced it would boost its dividend by 33%. GM also said it would repurchase $10 billion of shares. The carmaker is returning billions to investors despite a push into electric vehicles. That push has yet to show significant results. The buyback also comes despite a new labor agreement with the United Auto Workers that adds more than $9 billion in expenses. GM CEO Mary Barra says the agreement was the right call.
When you look at the suite of benefits that our represented team members have, it's a very appropriate package and, frankly, leading from an industry perspective broader than just the auto industry. So I think we did the right thing to recognize and reward the hard work of our manufacturing team members across the board.
GM CEO Mary Barra. Separately, the United Auto Workers Union is launching an aggressive campaign to unionize 13 non-union automakers. They include Toyota, Volkswagen, and also Tesla. The union is hoping to capitalize on recent contract victories with the big three automakers in Detroit.
Salesforce gave a profit forecast for the current quarter that topped analyst estimates. We've got the story from Bloomberg's Charlie Pallett.
It shows strong momentum in the software giant's cost-cutting campaign. The San Francisco-based company said earnings, excluding some items, will be about $2.26 a share in the period ending in January. Analysts on average projected $2.17. It said revenue will be from $9.18 billion to $9.23 billion. That compares with analysts' average estimate of $9.22 billion. In New York, Charlie Pallett, Bloomberg Radio.
Saudi Arabia is getting more involved in diplomatic efforts around the Israel-Hamas war. We hear the kingdom is offering to invest more in Iran, its traditional adversary, if Iran would keep its proxies out of the fight. We get more from Bloomberg's Sam Dogger.
I've been speaking to a number of experts, and they told me that for Iran, Hamas is less important than the others, particularly Hezbollah, which is the pillar, so to speak, of this whole forward defense strategy of Iran in the region. So Iran is very careful not to provoke a wider conflict in which Hezbollah would be enmeshed.
It's not clear yet how Iran might respond to the Saudi offer.
Well, China's PMIs for November are likely to show the manufacturing sector extending its contraction. Bloomberg's Yvonne Mann has more from Hong Kong.
The consensus in a Bloomberg survey of economists is for a mild pickup in manufacturing. The economists pegged the index at 49.8, indicating the sector remains in contraction. Early and leading indicators point to some softening in production. Meantime, in the non-manufacturing sector, economists suggest the index will pick up to 50.9 from 50.6 in October. But Bloomberg Economics expects the index to decelerate further. That's likely to do with the extended slump in the property sector and cooling tourism-related businesses after the October holiday. In Hong Kong, I'm Yvonne Mann, Bloomberg Radio.
12 minutes now past the hour. Joining us is Edward Harrison, Bloomberg team leader for the America's FX and Rates team, and he's with us here live on the show. Edward, thank you for joining us. I want to revisit a sort of non-consensus call in the marketplace that the hard part is over on inflation, that actually the last mile of disinflation won't actually be that hard. Goldman Sachs made that point a couple of weeks back. I'm not sure that many buy into it. Do you?
You know, I would say that I'm on the other side of that, but there are some people, Bill Ackman in particular, who are talking about this very much. In particular, Bill Ackman, who was very vocal about this in the David Rubenstein interview that he just did here on Bloomberg. He said that the Fed, concerned about the real rate of interest, that is, the nominal rate minus inflation, will eventually see very quickly, actually, in the beginning of 2024, that they're too tight because inflation has fallen so much.
We're still well outside the target band, though, so higher for longer, something we keep thinking about. Is the market getting a bit ahead of itself in terms of when it's anticipating easing?
I would say it is getting ahead of itself in terms of when it's anticipating easing. And in part, this is due to the uncertainty involved in where we are. Because if you think in the last 3 cycles, we've had 500 basis points or more of cuts, and then there's the potential that we have a soft landing. How do you hedge 0 cuts versus 500? You come out somewhere in between. But to the degree that you think that there is the possibility of a recession, then it's likely to be coming in a very short period of time, say 2024, and that's why we're seeing this bidding up of cuts coming forward.
I wonder if there's a little bit of Goldilocks in some of the retail activity that we've seen here of late with Black Friday and Cyber Monday, in that you have discerning consumers, you have retailers that to make their numbers, the numbers were good, but to make those numbers, they did have to offer discounts. And it wasn't like rampant, but they were definitely there. And to me, that indicates that companies find that they cannot continue raising prices, that consumers are becoming more discerning.
They really are. And it is amazing what will happen when you give a 50% discount, how many people will come and buy your products.
But I mean, it does have some implications for inflation coming down, doesn't it?
It definitely does. I think that it shows that at a minimum, on the good side of things, that we've seen the peak, and then the question now becomes the sticky part, i.e. the services part. That's where the real tough nut to crack is. The question is how sticky is inflation on the services side of the ledger, and how much of that will satisfy the Fed before they start cutting. I think that the market is a little bit ahead of itself if we don't have a recession, in terms of expecting any cuts in the near term. Even Bostic of the Atlanta Fed, who's one of the more dovish members, isn't talking about this. But nonetheless, I think that's where the sticky wicket is.
We've seen a pretty impressive decline in yields this week, the US dollar weakening as well. You're an FX and rates guy. How much further are these going to fall?
Yeah, I think that on the long end of the curve, it's very difficult to go much further from here. We're at about 425. Now, when you look at the Fed funds, the top end of the range is 550. So that's 125 basis points differential there that you're giving up. Certainly, you're locking in 425, and you rue the fact that you didn't lock in 5%, and that's a very nice coupon to clip. But the reality is that you are giving up 125 basis points by moving all the way out there. So the question then becomes, how much more can these yields go down, given that we're firmly anchored at 5.5% on the upper end of the Fed funds?
Yeah, quite interesting to note that the short end falling a little faster now than the long end. So that's something to keep in mind. One other issue that hasn't been talked about too much is China exporting deflation now?
Yeah, that is a good question. I would say that a corollary of that question is whether or not China matters less, in the sense that other Asian countries are now picking up the baton from China, and that what we're seeing in terms of China and their exportation of deflation is offset by a pickup in demand in other countries within Asia, in particular Japan, which has done relatively well for the first time in a very long time.
This is Bloomberg Daybreak Asia, your morning brief on the stories making news from Hong Kong to Singapore and Wall Street. Look for us on your podcast feed every day on Apple, Spotify, and anywhere else you get your podcasts. You can also listen live each day on Bloomberg 1130 in New York, Bloomberg 99.1 in Washington, Bloomberg 106.1 in Boston, and Bloomberg 960 in San Francisco. Our flagship New York station is also available on your Amazon Alexa devices. Just say, Alexa, play Bloomberg 1130. Plus, listen coast to coast on the Bloomberg Business app, SiriusXM, the iHeartRadio app, and on Bloomberg.com. I'm Brian Curtis. Join us again tomorrow for all the news you need to start your day, right here on Bloomberg Daybreak Asia.